But yes, it is all a continuation of the same failed economic policies, monetary policies, fiscal policies that led to 2008, right? In fact, the current policy mix, the mistakes that are being made are even greater than the mistakes that were made that led to that crisis. So the next crisis is going to be much worse because I think it's not going to be just centered, in the mortgage market, right? This is going to be a sovereign debt crisis where it's U.S. Treasury bonds, right, that are at the center of the crisis and the U.S. dollar. So it's not just a financial crisis. It's a U.S. dollar and sovereign debt crisis. And that has much more profound implications for the economy, for the financial markets, and it also takes off the table a government bailout. The way they were able to mitigate the crisis in 2008 was the government stepped up to bail everybody out, right? But if it's the government that is in crisis, if the government's debt is now suspect and nobody wants to own it, if the dollar is collapsing, the government can't bail out anybody because the government can't bail out itself, right? If no one wants dollars, then what good are printing more dollars? No good. It just throws gasoline on the fire. So this is going to be a much worse crisis, and there are no bailouts. Right? The only thing the government could do is to act responsibly, which is to cut spending and allow interest rates to go up, right? And so doing that means we get a stock market crash, a real estate crash, a bond crash, bank failures. We still get the financial crisis,